podcast. I'm here with Matt Dougal of Deribit. He is the author of the Deribit option courses. He also has a background in trading vol and crypto arbitrage. And in a prior life, he was a professional poker player. Matt, how are you?
I'm good, thanks. How are you?
Doing well. Well, I'm super excited to have you on. I mean, everyone knows about the option courses you wrote for Deribit. You have some awesome Twitter threads out there in the space. At Cryptarbitrage is the Twitter handle. And
Yep.
I'd love to just kind of get a little bit about your background. And for anyone who's sort of new to you or a new follower of yours, how did you get to where you are today? And maybe we could start all the way back from your days in poker.
Yeah, sure. My background is mainly in like the gaming industry. I used to work in a casino as a croupier, but then I only did that for about a year, and then I just started playing poker for a living. And this was back in sort of maybe 2006 or something. So poker was still in its heyday back then. And I would also do sports betting arbitrage online. So I would look at the lines for, say, a horse race and wait for one of the bookies' lines to be out of place, just take advantage of that. But that only lasts so long before you get banned by most of the bookies.
Wow.
But then I stopped doing that for a while, and I started running my own eBay business, and that was going fine. But then I got into crypto in 2017, luckily at the start of 2017. So I did quite well in 2017 doing cross-exchange arbitrage, like you said. Back then, the price differences between exchanges would be quite large, and you could just take advantage by buying Bitcoin on one exchange, selling it on the other. It was very easy, and even I would like to just hold crypto, so I would do like Bitcoin versus Litecoin, Bitcoin versus Ethereum, stuff like that. Because then it was very quick to reorganize your funds to reload and do the arb again. Because if you're using fiat, maybe you'd have to go out to a bank and then back in. That could take several days, maybe even a week. But doing crypto to crypto, you could just send it back, and all you'd have to wait for was, if Bittrex wanted 3 confirmations on Bitcoin or something, you'd maybe have to wait half an hour, but you could reload and do it over and over again. So I would just set alerts on TradingView. It would tell me when the market was moving at all, and the gaps were there to be taken advantage of for anyone who was willing. And I would do it manually. But then after a couple of years of doing that, the big boys came in with automated techniques and closed the gaps quite a lot. So I don't really do much of that anymore. I can't even remember the last pure arb I did like that.
Cool.
So yeah, that was my journey into crypto.
Yeah, that's fantastic. So kind of starting with, you said you were doing like trades against bookies, and you said on horse races. Like, how do you calculate the odds there? How can you even like see something out of line for someone who's never done anything like that?
So my spreadsheets were very helpful for that. I'm a big fan of Excel and always have been. And it was very useful for that. So I would just input lines. So I would input the odds for every horse or something, and my spreadsheet would spit out the total percentage for the whole line across all the bookies. And if it was, the right side of 100%, I would know there was an arb there. And then I'd have another sheet that would tell me what proportion to place my bets in to guarantee a profit. Normally, particularly on horse racing, the odds will change quite a lot in the hour or so before the race. And some bookmakers are just too slow to move their prices. So they might still have a price of 50 to 1 on a horse that's come into maybe 10 to 1. But the rest of the bookies have got it at 10, but this bookie's got it at 50 still. So if you're quick enough, you can pick that off quite easily. And in the UK, if they take a bet, they have to honor it. So even if they know you're arbitraging, but eventually, once they know you're doing that, they won't take your bets anymore.
That's fascinating. So it was like a guaranteed profit. It was basically like the expected value. You get a payout because you bet on every horse, and then the
I
payout...
know exactly what I was going to make before the event took place, and it would work with football games and basketball and stuff, but the lines were normally a bit tighter on those.
And is this one of the... Sorry, go ahead.
No, go on.
Is this one of those things where like you can do it online, or were you actually at the racetrack manually making
No,
bets?
I was doing this. I'd say 99% online. I would occasionally go into a bookie, but yeah, I did actually work in a bookmaker's for a brief time as well. I worked in a William Hill, so I got to see it from sort of the other side of the counter.
Oh, that's
So that was
fantastic.
interesting.
So on the other side of it, is it mostly like you reflect the odds based on the amount of flow going one direction or the other?
So yeah, when the bookmakers are taking bets on a particular horse, they will bring their odds in because they don't. If lots of money is going in on a horse that's 50 to 1 or something, the bookmakers just automatically get suspicious and they bring the odds down and down and down. But if one particular bookmaker isn't getting much flow on that horse, maybe they just haven't brought their line in quick enough. Nowadays, I'm sure they're all tracking each other much better, and if the odds come in on one bookmaker, I'm sure the others will just react to that, whether or not they're getting that flow themselves, to protect themselves from people doing arbitrage. But back then, it was quite easy. They weren't really paying attention enough because online gambling was quite big. Everyone was playing poker. People were getting into roulette and blackjack. So these websites would just throw bonuses at you. They wouldn't really be tracking that much. So you could get away with taking advantage of them, basically, until someone in their risk department noticed and eventually limited all your bets.
Wow, that's fascinating. So now, after that, you went into poker, and this is kind of a classic line of traders. A lot of prop traders that I've met throughout my years are ex-poker players. What are some of the, what were some of the things that helped you transition to poker, and what are some of the skills that you learn in poker that translate so well into trading?
Yeah, I would say just that expected value mindset, because when you're playing poker, you've got to get out of the mindset of being very results orientated, where you get a bad beat or something, you go all in with aces or whatever, and someone gives you a bad beat, you had better cards but you lose. You've got to not focus on that one hand. You've got to focus on the bigger picture of getting your money in when you've got the best of it as often as possible, and just trusting the sort of law of large numbers to, on average, you'll get paid out. If you're playing better than your opponents, you're getting your money in the middle when you have the best chance of winning, then you will win. And I think that definitely translates over to trading as well, because when I'm not a very good price forecaster, I would say. I don't know where the price of Bitcoin's going, but just getting into that mindset of finding some sort of edge, like it could be the volatility risk premium or something like that, and just knowing if you do something over and over again and you've got an edge, it will pay off eventually. So that's something that definitely translates over from poker, I would say.
And then when you got started in poker, did you like read a bunch of books and like understand all the rules and all the odds first, or did you sort of start playing and then start learning as you're playing, kind of sharpening your game?
I did start, when I first started, I just started playing in school. So I was in sixth form, just in my sixth form college, and in our breaks where we had a free period or whatever, we would just sit and gamble on the tables in sixth form, which was quite fun. But then, when I took it a bit more seriously, I would read books, I would watch videos. There were a couple of websites that I forget the name of now, but that, it would be people playing poker and giving commentary and trying to teach you how to play better, basically. And then I had some software, I think it was called Hold'em Manager, that would track your hands, and you could go back and look over hands you've played, like, could I have played this better? Like, what range of hands does this guy normally play in this situation? If you're playing with the same people over and over again, you might have 10,000 hands with the same opponents. So you could even go as far as analyzing their hands, like see how they play certain things and how you could maybe play better against that. But I scaled up my poker operation by just playing more and more tables, which, looking back, I maybe should have just focused on getting better. But I would play more and more tables, just getting more and more hands, trying to get that law of large numbers to come in and just play out in the long term.
So you mentioned something when we spoke the other day about playing something like 35 tables or up to 35 tables at a time.
Yeah.
And you had a script that would would it see like the cards you're dealt, like the two cards, and then it would pop up the screen if this is like a hand worth playing, or how did that work?
Well, I'd have all the tables open as you normally would. If you're playing online, you'll have a little separate window per table that you're playing, and I would stack all the tables I was playing up on one corner of my screen, and then I had a script where I would press either F1, F2, F3, F4, and that would move a table to one corner of the screen, basically. So when it was my turn to act, the table would pop up and that would be active. And then the script would act on whatever table was active. So I could move one, if I had a good hand or it was an interesting situation, I would just pull that, move it top left, top right, bottom right, whichever one was free. So I would have a big stack of like 30 tables that, most of which I don't need to be paying attention to. And then maybe 3 or 4 that I do need to be paying attention to because I'm involved. And obviously when you're playing like that, you're not paying as much attention as you would if you were just playing, maybe 4 tables at once, where you can watch every table. So you need a decent edge to be, because your edge will be less when you're playing like that. So you need a decent edge already. But then also I would say you're probably not getting much better at poker while you're playing like that. You're just playing like a robot, churning out your small edge, as many times as possible, basically.
That's really interesting. And is it as simple as like I play 35 tables, I just wait till I get pocket aces, and then I don't play anything else? Or does it get more complicated than that?
No, I would play reasonably aggressively. Maybe not in comparison to some, but you're not just waiting for aces. You've still got to mix it up a bit, because otherwise other people will notice that you're just waiting for the best hand. In the early days, you could do what was called set mining, basically, where you just try and get to a flop with a pair, and if you get 3 of a kind, then you just try and get people all in, and you could pretty much make a modest living doing that in the early days. But very quickly the games got a lot harder than that, and you had to actually mix it up a bit and raise with maybe not the best hand and not just play aces.
That's fantastic.
So eventually the games got hard enough to where my edge was just very small, because I was playing 35 tables, not, I wasn't playing the most skilled poker, so my edge was too small eventually. So I just dropped down to fewer tables, and then eventually I just stopped playing poker because I saw that my edge was not large enough to justify doing that for a career anymore. So I moved on.
Yeah, that makes sense, because I mean there's still a pretty high bar on your time, and like if you have the statistical mindset, that's like a valuable skill set that you could apply it somewhere else. So I'm seeing a pattern. Yeah. So first it's essentially bookie arbitrage, then it's high statistical or stat arb, essentially high statistical situations in poker. So then how did you find your way into crypto arbitrage? Like when's the first time you saw that on the screens?
Well, first I was interested in crypto regardless of arbitrage. I'd heard of Bitcoin a few times, sort of loosely tracked it over the years. I think at the end of 2016 I saw it was $1,000. I was like, oh wow, I wish I'd bought this when I first noticed it. So I started buying some in early 2017, and I was not as security conscious as I am now, so I was just holding most of it on exchanges. And I would notice the price of other coins as well, so like Litecoin and stuff. I started following people on Twitter and watching some YouTube videos. Just became more interested in trading in general, and I just noticed the price difference just while I was holding crypto on several different exchanges. I was like, hang on, it's 5,000 on this exchange, but it's 5,100 on this exchange. I could just buy one, sell the other, and pocket 100 pounds or whatever. And as soon as I noticed that, my mind immediately went back to the sports betting arbitrage. I was like, oh, hang on a minute, this is going to be good. And this is on exchanges that don't care that I'm making this. In fact, they like it. I'm closing their prices for them. I'm doing them a favor. So I was like, I could scale this up a lot better than I could with the sports betting, because the bookies aren't going to ban me. The exchanges aren't going to ban me for trading more. So that really sort of set off a light bulb above my head there. And for several months at the end of 2017 and then in the start of 2018 as well, that was most of what I was doing. I was just sitting at my computer all day watching crypto prices, had several exchanges open, trading view telling me what was going on. So several months. All the initial money I made in crypto was basically in that time, just buying and selling the same asset for different prices.
Wow. And you're saying that you can actually set alerts on TradingView and that will alert you when there's sort of a cross-exchange arb?
Yeah, and nowadays that's a little bit easier. You can do sort of composite charts. But back then I would literally just have an alert that told me when Bitcoin had moved by more than 2%. Because as soon as it moved by more than 2%, some exchanges wouldn't have caught up yet. Altcoins would have moved by even more. I had alerts on a few other coins as well. So I'd have an alert at 2, and an alert at 5, and an alert at 10 or something. So if the 10% alerts started going off and it had moved more than 10% in, I think it was a quarter of an hour, I knew to stop what I was doing and get to a computer immediately.
Wow.
Because there would be some crazy opportunities.
So it's really in the fast markets, big moving markets, that these arbs would really sort of be fruitful.
Yeah, certainly back then. As soon as the market moved, some exchanges would move, some exchanges wouldn't. And I think larger players weren't holding money across all these exchanges. Well, they can't have been, because I was able to do this manually. So like some of these arbs lasted days even. There was an almost 5% arb on the Bitcoin Litecoin rate between Bittrex and Coinbase, and I think it was almost a week in sort of November 2017. So I was just rinsing that over and over again as many times as I could.
That is amazing. Yeah, even in 2021, I saw a weird arb with Ether Classic on Binance versus Ether Classic on Coinbase, and it was tradable.
Oh, yeah.
It was actually...
Yeah.
So...
First thing I always used to check was, are withdrawals working? Because that would quite often be the reason. If it got really large, that would normally be the reason for the arb. It's that it was impossible to close the loop. You couldn't repeat it. If you already had funds on the exchange, you could still take advantage of it, which is why I used to leave funds on several different exchanges, because the withdrawals go down on ETH, for example, on Bittrex, then there's going to be a huge arb on ETH. There just definitely will be. And you'll only be able to do it once, but if you've already got funds there, that could still be maybe 10% or something, which is a nice payday even for the whole day.
Wow, that's fantastic. And so you do these arbitrages for a while, and now how do you find your way into Deribit and into trading CryptoVol?
Yeah, that was largely because of the bear market in 2018, I think. When the prices went down, so did the price differences. There just wasn't as much arbing. By mid sort of 2018, what I was doing manually at least wasn't as profitable. So I started looking into new things, and I knew roughly what an option was, but not really, only superficially. So I found Deribit, and I wanted to know what these cool new contracts were that had weird percentages next to them, the volatilities. So I just started building some spreadsheets to tell me, the profit and loss of combinations of options. Like if I buy this call and sell this call, what's my payoff look like at expiry? And then I would build in, the today line and what happens if volatility moves and that sort of thing. And I would release these spreadsheets in the Deribit chat, just free for people to use. And then by sort of mid 2019, I was working on Deribit content more officially and releasing like articles and spreadsheets. And they were a good way for me to learn options and learn derivatives better than I already knew them, just by making educational content.
That's fantastic. And then you said that you made the whole Deribit options education courses. So can you maybe give us a little overview of that, and how long did it take, and sort of your process and those details?
Yeah. So after I'd been doing like the just more sort of one-off articles for a while, I would basically just pick a subject that I was interested in or that I was learning about at the time. And then I would write about that. But then someone at the Deribit marketing department came to me and said, "Hey, would you want to do this in a more structured way. So we've got a more structured course for users to work their way through. Because I think a lot of new users, certainly if they're new to options, they log on to the Deribit website and it's confusing.
Yeah.
If they go to the option chain, there's a lot of numbers there. If you don't know options, it's pretty confusing. And even if you're from more traditional markets and you do know options a little bit at least, it's still confusing when they're inverse contracts. Like there's some important differences. So I wrote like an outline of I think it was maybe 100 different lectures in a few different sections, and then I just started writing. And I think it took maybe 2 years, I think, to write and record all the videos and do all the animation and stuff. And I am still adding to it very slowly, but just a later section that's more sort of live examples of how to actually put some of what you've learned into practice on the Deribit platform. So I'm doing like a long straddle that I delta hedged at the moment. That'll be the next one I release. But yeah, I think it took about 2 years to do the whole thing. So it was quite a long project.
Yeah, that's very cool.
But most websites don't have such in-depth courses, I think. Like Binance have some articles on, what is an option and stuff like that. And, that's what Deribit had as well. But yeah, we wanted something that was more structured. Users could go through bit by bit, and by the end, they'd actually know what an option was and why the profit looks like that, and what's the difference between an inverse contract and a linear contract.
I mean, I've heard nothing but great things about the Deribit option courses. So they're definitely an industry standard now. So congrats. And I mean, 2 years, that's a lot of work and like dedication. So kudos to you. So now you are currently working full time for Deribit. Now, what capacity are you working for Deribit? Like what's your role nowadays?
Yeah, I still do a bit of content. But that's more on the side now. Since August, I've been working with the risk and product team. So the risk team in general manages risk on the platform, and they also work on improving the mark price calculations and algorithms, which is complicated, as I'm sure you're aware, but very important because the users' margin requirements are calculated using the mark prices. So even if there's no market at all, we still need to come up with at least roughly fair value for every single product on the platform, including the hundreds of options at every strike, because there'll be market makers holding almost all of these options in some form or another. So we need to have some sort of fair value for the whole curve. Otherwise, their margin requirements will fly way out of control. So that's something that's still actively being worked on, and probably always will be actively worked on. But the risk team also, monitors risk in just individual traders' accounts and making sure everyone, hasn't got on any positions that are too risky for them or too risky for the platform overall. So that's most of what we work on.
Yeah, that's a pretty important role. So you mentioned you're also on the product team. So one of the products that I've been waiting for forever that I'm so excited about, and I'm sure you can guess it, it's the Devol futures. Is that still something in the pipeline?
Oh, yes. That will be coming this year at some point.
Oh, man, that's amazing. I cannot wait for that. I think that's such a...
Yeah, we had a meeting today where that was talked about. So that's definitely actively being worked on right now.
That's fantastic. And do you know if it's going to be like a single contract, or is it going to be like a front month, a back month?
There'll be multiple contracts is the aim. I think at first we'll probably release one or two, probably just on Bitcoin. We'll probably release one contract on Bitcoin to begin with, just to make sure there's no major bugs and stuff like that. But yeah, the long-term goal would be to have several contracts on both Bitcoin and Ethereum.
I think that's...
I think a lot of people in the vault space are waiting for that kind of product.
Absolutely. That's such like a innovative product, and having the underlying options market enables Deribit to actually do that. Where else, who else can do that? No one that I can think of.
I don't know where else could do that as well, because our option market is by far the most liquid. So I think eventually we would hope to have options on the futures, which would be super cool.
Yes. Then we could have some vol stuff.
Yeah.
Just like VIX and VVIX, which would be
Yeah,
amazing.
yeah.
Oh, that's so exciting. And so, is there anything else that you guys have in the pipeline, or do you have any like opinions on sort of the vol market or some things that excite you coming forward?
So me personally, I'm working on a option backtester, so that people can input sort of systematic strategies where maybe they want to know if I sold a 35 delta strangle over the last sort of like 2 years, how would that have performed if I sold it, once a week or something? And we'll have like a bunch of like opening criteria and closing criteria, eventually have criteria sort of what would happen if I sold that strangle only when volatility is above a certain level or below a certain level. So it'll allow people to see how options behave, basically, how certain strategies would perform over time, but also in different sort of market environments. So I'm quite excited about that because I'm not aware of anything like that anywhere else at the moment.
Yeah.
Certainly not crypto landscape anyway.
Those types of backtesters are usually like very secret sauce, hidden on the desk. Only a couple people know how to work them, and we don't share that with anyone. So that's
originally I started building it just to see if I could in Python, just for myself really. But then I was like, I could actually do this. So I've now handed it off to a much better programmer than me at Deribit. So that should be coming hopefully soon as well, in the next few months, I think.
Cool. And so for someone who's like a newer trader or newer to their career and, would like a career like yours, is there any books along the way that, helped shape your career or helped shape your understanding?
In terms of options, I would certainly say all of Ewan Sinclair's books. They're by far my favorite books. Before those, I read Nattenberg. Hope I've pronounced that correctly.
Yep.
But that's the classic one that everyone reads first and calls the Bible. I've never actually read Hull, but I hear it's excellent. But yeah, Ewan Sinclair's books were definitely my favorite. Also, the Volatility Smile, I forget the author, and Trading Volatility by Bennett, I think it was. Those 5 books are all excellent.
Very cool.
All 3 of Ewan Sinclair's books I've read, and I would advise everyone to read them all.
I second that. Trading Volatility is my favorite book, for sure.
Yeah, it's excellent.
And so when you're not working at Deribit, when you're not building a backtester, what do you like to do for fun, Matt?
Well, I consider learning Python quite fun. I've been doing that only for the last year, and whenever I start learning something where it's still quite fresh, the rate you learn it is quite fast, and I find that really fun because you improve so quickly, so much quickly than after you've already known it for 5 years or something. But I'm also learning Spanish because my wife is from Spain, and I would like to be able to talk to her family.
Nice.
And drumming and piano are my other interests.
Oh, interesting. How long have you been drumming or playing piano for?
I think I first learned the drums when I was 15, so a while ago. But piano is more recent. I only started learning piano maybe 2 years ago or something. And I'm not very good yet, but it's a really fun hobby. Because drums is super fun. You get to work out your aggression, just make a lot of noise. But you can't if you think of a cool melody, you can't really do that on the drums. But the piano, you can actually do some cool melody stuff.
That's so funny you say that. So my dad's a professional drummer, so I grew up with a professional drummer
awesome.
as a father. So of course I went to finance because I was like, I'm all about the finance.
Nice.
Well, Matt, thank you so much for coming on the podcast. I mean, we covered a lot of very interesting things. So thanks for sharing some of that Alpha League. And to anyone who tuned in, thanks, and we'll see you next time.
Thanks for having me.
Absolutely.
Cheers.